Now, billionaire George Soros has cut his firm's exposure to U.S. stocks by 37% in the first quarter, but our next guest still believes big players such as Apple and Disney offer value for money for Malaysian investors. Joining me on set now for this is Devon Linus, the founder and chief investment officer for Malayan Traders Capital. So Soros saying, not much appetite, but today BlackRock Larry Fink saying the safest neighborhood right now is in North America, and you agree, but it's the blue chip players who you're liking, and Apple getting a shot in the arm from Warren Buffett.
Yeah, we have been talking about Apple for a while, and Warren Buffett, I guess Warren Buffett coming into Apple is a good sign that actually, if you understand Warren Buffett, it's always a 10-year play. So it's a good sign that Apple is going to be a company that's going to be there for the next 10 years.
And you're a deep value player here, and the way that Apple has been performing is certainly considered cheap at current valuations.
Yes, it is. So, I mean, at the end of the day, there's a decrease in the amount of revenue they're getting from China. But I think they're doing some amends on it, and that's why they bought Didi Kwadi on the weekend. And it's just once they release the new iPhone 7, you're going to look like at an increase in sales. Everybody's going to be buying that.
We're looking at some shifts in the way that iPhone manufacturing is to be made. For example, there might be a move to another type of display screen, not OLED in the future. But in the tech manufacturing space, what other types of themes are you liking here, maybe as a knock-on effect from Apple?
Knock-off effect for Apple, I think you look at the SSD players, because at the end of the day, for every phone that's being sold, and not just Apple, like every other mobile phone that goes out there, they have a hard drive inside there. So it'll be the SSD players and the chip makers, like ARM, who makes the chips for Apple. They're also making it for Samsung, but Apple is still using ARM at this stage, and so these two players are likely going to benefit.
Well, one could say that Apple's not just a tech company, it's a consumer-oriented company, and so that consumer play is something we're certainly keeping an eye on. U.S. retail sales doing better in April. What does that mean for you then when getting exposure perhaps to that kind of space?
Yeah, I think when it comes to U.S. Retail sales, at the end of the day, it's like when things are really bad, people just want to spend money and just enjoy themselves. So people are spending more. They probably won't be buying a new iPhone because they already own it, but people are going to the movies. So one of our other things that we think is good is Disney, because people are still going to the movies. Like Disney Studios, earnings in the last quarter went up 20%. And have you watched the latest Civil War?
Yes, I love it.
Yeah, just a sign. So they have this whole network, Civil War, The Avengers, they have this Star Wars. Now you're having like probably 2 Star Wars movies a year. So it's going to be pretty awesome in terms of entertainment for America, and also great for investor entertainment companies.
We have players like Wanda's Wang Jianlin also believing in that entertainment story, the way they've been buying up AMC, for example. So other than Disney, how else are you looking perhaps to get exposure to this?
You should look at like those who, our good friend who actually sold off Apple, Carl Icahn, he actually invested in Netflix a while back because of the media play. So companies like Netflix, although you have to evaluate, we are deep value, Netflix to be is a bit pricey, but but there are many companies out there. There's Netflix, there's Disney. You should start looking at Liberty Media, Fox Studios that makes all the TV shows. So there are quite a number of players out there that in the media space that you can take advantage of.
A lot of them are looking to emulate Netflix in many ways when it comes to content creation. Showtime, for example, looking to roll out its own type of original content. But when you take a look at Netflix as a benchmark in the space, why do you call it too pricey?
At the end of the day, we don't. It depends on the type of investor you are. If you're a type of investor who really wants the growth, then you're willing to pay for that growth. But the moment that growth doesn't come, just like Apple, the growth, everybody thought Apple would grow 20% per annum. We invest in Apple because we know it's going to go 10% per annum, so it's still going to make money. But the moment they don't make 20%, they make 10%, the stock price crashes a lot. So that's the risk with Netflix. Whereas with other companies, if you're buying it at the cheap, you're buying it at low valuations. Even if they grow at 10%, you're going to get a 10% per annum return. If they grow at 20-30%, then you get a 30% per annum return, which is what we want, and I think what investors want.
And you're not worried then when Tim Cook is saying himself that sales are likely to decline?
Yeah, because at the end of the day, what they're doing is sales are likely to decline, but what they're doing is they're doing a lot of share buybacks, they're doing a lot of dividends. Dividends, which means they're returning money to shareholders. So at the end of the day, their earnings per share will likely slowly increase over time. And at the end of the day, even though sales are declining, at the current valuation, Apple's earnings in the last quarter is more than the combined earnings of Amazon, Facebook, and Google. So just how big it is. So even if it declines a little bit, it's still a lot of money, and it's a 500 billion market cap company. Whereas Facebook is 350 billion, but Apple makes Facebook, Amazon, and Google's earnings. Yeah.
And year-to-date, U.S. Equities, the return on them far outpacing the likes of the MSCI Asia Pacific gauge, for example. So
Yep.
again, getting that exposure to diversify is important for an investor in this area.
Yeah, I think 10 years ago, Malaysian investors couldn't buy US stocks. They always stuck to the Malaysian companies. Like you saw UMW Oil and Gas. You got a lot of oil and gas players, but then now oil and gas is really bad. What else can you buy in Malaysia? Banking, oil and gas, palm oil. When you go to the US, you get entertainment, you get like tech, you get consumer stocks, you can buy like you can buy like crafts, you get food. So there's a lot of exposure. Any broker can buy US stocks these days in Malaysia, so they should take some exposure there.
Get some appetite. All right, we're going to get right back to you. More from Devon in a few minutes' time, including what a win for Donald Trump would mean for the rest of us.